The night George Soros changed global finance forever. London, September 1992. The city looked calm, mist rolling over quiet streets, golden reflections stretching across wet pavement. But behind closed doors, chaos was brewing. Phones rang nonstop, screens flashed numbers too fast to follow, and one man sat in silence, waiting. George Soros wasn't just watching the market, he was watching a system on the verge of collapse. Within hours, he could make $1 billion, or lose everything he had built. This is the night one man broke the Bank of England and changed global finance forever. Part 1. The night before the storm, London, September 1992. The city was wrapped in the familiar autumn mist of England. Streetlights reflected on the wet pavement, stretching into endless golden threads. Black taxis glided through empty streets. The distant whistle of the underground echoed faintly. London looked as peaceful as any other night. But inside a trading office downtown, everything was different. Phones rang without pause. Computer screens flickered endlessly. Numbers danced up, then down, then up, too fast for the human eye to follow. A young trader stared at the charts, his forehead creased in confusion. Why is the selling pressure so heavy? No one answered. No one had an answer. Or rather, only one man did. And he wasn't in that noisy office. In a quieter room nearby, George Soros sat still. No noise, no panic. Just a cup of coffee long gone cold and a single thought looping in his mind like a song without end. This cannot last. That night, Soros did not sleep. Not because he was worried, but because he was waiting for a massive system to collapse. And within hours, he could earn $1 billion, or lose everything he had built over a lifetime. Part 2. The man who saw markets as flawed systems. To understand that night, you must understand the man. George Soros didn't see financial markets the way others did. While most investors focused on charts, numbers, and short-term trends, Soros looked deeper and wider. He saw systems. He searched for cracks, contradictions, the moments when reality and human perception began to drift apart. He called his theory reflexivity. The core idea was simple yet profound. Markets never reflect reality perfectly. Instead, human perception constantly feeds back into reality, distorting it. Markets aren't just mirrors of the economy, they are living entities, continuously warped by the very people inside them. And when that distortion reaches its peak, when the gap between perception and reality grows too wide to sustain, the market adjusts, suddenly, brutally, without mercy. In 1992, Soros looked at the British pound and saw exactly that happening. Part 3. The distorted picture. To understand this story, you need a bit of historical context. In 1990, the United Kingdom joined the European exchange rate mechanism known as the ERM. This system was designed to keep European currencies stable, as a step toward the eventual creation of the euro. Under the ERM, the British pound was pegged to the German mark at a tightly controlled rate. The problem was simple. The rate Britain had committed to, 2.95 marks per pound, was far too high for the country's economic reality at the time. Think of it like this. You're trying to keep a clock that's running fast, but you insist to everyone that it's perfectly accurate. At first, no one notices. But over time, the gap grows and eventually no one can pretend anymore. Britain's economy was struggling, inflation was high. Growth was slowing, unemployment was climbing. To maintain the ERM peg, the Bank of England had to keep interest rates painfully high, squeezing an economy already gasping for air. Meanwhile, Germany had just reunified and needed high interest rates to control its own inflation. Two economies with completely opposite needs, locked into one fixed exchange rate, this was a recipe for disaster. George Soros saw it all clearly. While most believed Britain would find a way to cope, Soros concluded, this cannot last. Not because he had secret information, but because he understood the internal logic of the system. Part 4. A dangerous thought. There are moments in life when you face an uncomfortable question. What if they're all wrong? This wasn't arrogance. It was the conclusion of a man who had analyzed carefully, checked his reasoning again and again, and arrived at a frightening truth. The system the world trusted might be broken. Soros faced that question in the summer of 1992. If he was right, if the pound truly couldn't hold its peg, this would be the greatest trading opportunity in history. He would have to short the pound on a massive scale. Against the British government, against the Bank of England, against the entire ERM and the backing of Europe. But if he was wrong, if Britain somehow held the line, Quantum Fund could suffer catastrophic losses. It wasn't an easy decision. And there was a moment, a real moment in this story when Soros did nothing. He didn't trade. He didn't act. He just thought, because he knew better than anyone, not every opportunity is worth the bet. Confidence doesn't mean recklessness. Many times in his career, Soros had seen opportunities but chosen not to act because the timing wasn't right. The conditions weren't mature or the risks weren't controlled. But this was different. This wasn't a normal opportunity. This was a systemic error, too big, too obvious, and only a matter of time before the entire structure collapsed. Part 5. The Bet of the Century. By late August and early September 1992, Soros began to act. He and Stanley Druckenmiller, who was running Quantum Fund, at the time started building a short position in the British pound on a scale never seen before. They borrowed pounds and sold them, betting the currency would fall. Through leverage, the amount they mobilized reached more than $10 billion. $10 billion. A bet against the central bank of one of the world's most powerful nations. Druckenmiller later recalled that he was the one who first proposed the trade with a size of about $1.5 billion. But when he presented it to Soros, his boss's reaction changed everything. If this trade works, Soros said, why don't we do it much bigger? That was Soros's mindset. When the odds are clearly in your favor, don't hold back, maximize. They raised the position to $10 billion. Part 6. Britain fights back. The British government did not sit idle. The Bank of England began intervening in the market, using foreign reserves to buy pounds in order to defend the peg. They spent billions buying, trying to absorb the massive wave of short selling pouring in from speculators like Soros. On September 16, 1992, later called Black Wednesday, the government unleashed its final weapon. They announced an interest rate hike from 10% to 12%, and just hours later raised it again to 15%. This was an extraordinarily high rate, a desperate move to attract foreign capital and protect the pound. The news spread instantly. London's financial world was stunned. 15% interest rates? No one could believe it was real. But Soros didn't budge. He understood that no matter how high rates went, they couldn't fix the fundamental problem. Britain's economy was weak, and the ERM peg was far too high compared to reality. No number on paper could change economic truth. And he was right. Speculators worldwide, encouraged by Soros's massive position and his undeniable logic, kept selling the pound. Britain's reserves drained rapidly. The Bank of England was spending real money to fight a market force too large to control. Part 7. The moment the system collapsed. By the evening of September 16, 1992, Prime Minister John Major and Chancellor Norman Lamont delivered a brief statement to the press. The United Kingdom was withdrawing from the European exchange rate mechanism. The pound would float freely. Its value would be allowed to fall to whatever the market dictated. Within hours of that announcement, the pound collapsed, dropping more than 15% against the German mark and over 25% against the US dollar. And Soros, holding a massive short position in the pound, immediately closed his trade. Profit, more than $1 billion. In a single day. When the full trading period was calculated, the total profit reached about $1.5 billion. It was one of the most profitable trades in modern financial history, and it was executed by one man, armed only with analysis, conviction, and the courage to bet against an entire system. The British press gave him a name that would echo for decades: the man who broke the Bank of England. Part 8. But this wasn't just about money. It's easy to look at the $1 billion figure and think this was simply the story of a brilliant speculator making a fortune. But if you look deeper, the lessons are far greater. Lesson 1. The courage to trust your own analysis. Soros didn't have secret information. He read the same newspapers, followed the same economic indicators as thousands of other analysts. The difference was that he was willing to draw a conclusion others feared to face, and more importantly, he acted on it at a scale large enough to matter. Most investors, even if they saw the pound's weakness, wouldn't dare bet against the British government, because it was terrifying. Because if they were wrong, the consequences would be devastating, because the crowd still believed in the system. Soros wasn't bound by those fears. Lesson 2. Understanding the difference between risk and uncertainty. Many looked at Soros's trade and said, that was reckless. But from his perspective, it wasn't. It was a calculated bet. He knew he could be wrong, but he also knew the odds of being right were far higher than the market was pricing in. And he structured the trade so that even in the worst case, Quantum Fund could survive. That's the difference between gambling and calculated investing. Lesson 3. Markets ultimately reflect reality. The British government could spend billions defending the peg. They could raise interest rates to 15%. They could make endless declarations to the press. But in the end, no administrative power can override economic reality for long. If a currency is priced too high compared to its fundamentals, the market will correct, sooner or later, no matter how much political or financial force is thrown against it. Part 9. The man behind the trade. There's one detail many people don't know about this story. Soros didn't personally execute the trade on September 16th. The man sitting at the screen watching every tick of the pound, making the final decision, that was Stanley Druckenmiller. Soros had handed control of Quantum Fund to Druckenmiller back in 1988, after the shock of Black Monday in 1987, and the relationship between these two men became one of the most fascinating partnerships in modern financial history. Druckenmiller had a natural gift for reading markets and executing trades, but Soros taught him to think bigger. When Druckenmiller proposed shorting the pound with a $1.5 billion position, Soros challenged him. Why not go larger? Why not maximize when the logic is entirely on your side? It was a lesson Druckenmiller later said completely changed the way he viewed investing. Not reckless risk-taking, but when you've analyzed thoroughly, when the odds are clearly tilted in your favor, don't be afraid of scale. Soros and Druckenmiller weren't a typical boss-employee duo. They were two minds that complemented each other. Soros brought the macro vision, the ability to see through the sweeping currents of history and global economics. Druckenmiller brought execution, the ability to turn abstract ideas into precise trades with perfect timing. Together, they built one of the most effective investment machines ever to exist. Part 10. Consequences and Legacy. After Black Wednesday, Britain plunged into a severe political crisis. John Major's government suffered a devastating loss of credibility, an event that contributed to the Conservative Party's defeat in the 1997 election. But something strange happened in the years that followed. The British economy actually recovered strongly after leaving the ERM. A weaker pound made British exports more competitive. The Bank of England no longer had to keep interest rates painfully high to defend the peg, and could lower rates to stimulate growth. The economy began to rebound. There was a bitter irony in this. The collapse Soros triggered, or rather accelerated, actually helped Britain escape a dangerous economic trap. Of course, that didn't make ordinary Britons feel any better about the fact that one man had profited more than $1 billion from their country's crisis. And this remains one of the most controversial points about George Soros. Did he truly harm Britain, or did he simply recognize and act on a policy mistake the government had created? Was he a saboteur, or the man who forced an unsustainable system to face reality? There is no simple answer. And that's part of why George Soros remains one of the most divisive figures in the world to this day. Part 11. The Man and Philosophy. One thing few people know about George Soros is that he wasn't just a financier. He had a serious background in philosophy. Born in Budapest in 1930, Soros grew up in a Hungarian Jewish family. He lived through the Nazi occupation of Hungary during World War II, a time when he and his family had to forge false identities to survive. Those years gave him an instinctive understanding of how fragile systems can be, how things that seem eternal can collapse overnight. After the war, he moved to London and studied philosophy at the London School of Economics, where he became a student of Karl Popper, the famous philosopher known for the concept of the open society and the scientific method of critical thinking. Popper's ideas deeply shaped Soros's view of markets, politics, and the world. From Popper, Soros learned that every theory, every system can be wrong, and the strength of science lies not in proving you're right, but in constantly testing where you might be wrong. He carried that mindset into finance. He always assumed his own views could be wrong, always searched for evidence that might disprove his own thesis. That was one of the reasons he survived shocks like Black Monday in 1987, when he lost $840 million in a single week. He didn't cling to losing positions. He didn't let ego interfere with financial decisions. When reality showed he was wrong, he recognized it, cut his losses, and moved on to the next opportunity. Part 12, From Money to Ideas. After the victory of 1992, Soros didn't stop at accumulating more wealth. He founded the Open Society Foundations, a global network of charities aimed at promoting democracy, human rights, and open societies in line with Karl Popper's philosophy. He spent billions on education, political reform, and supporting civil society in countries he believed were oppressed by authoritarian governments. This shift from finance to social and political activism made Soros one of the most controversial figures in the world. He was celebrated by supporters of democracy and open societies. He was despised by governments he criticized and by political movements he opposed. But whether you agree with him or not, it's hard to deny that Soros was one of the very few who successfully transformed financial power into intellectual influence. From a man who made money in markets, he became a man trying to shape how the world itself operates. London, September 1992. That night ended. But George Soros's story did not. He was the man who survived the Holocaust. The man who started from nothing in a foreign land. The man who built one of the most successful investment funds in history. The man who lost $840 million in a single week and earned it all back within 2 months. The man who broke the Bank of England and made $1 billion in a single day. And the man who used what he earned to try to change the world in the way he believed was right. You may disagree with him on many things, on politics, on the role of financial speculation in the economy, on the organizations he funds and the movements he supports. But one fact cannot be denied. George Soros was the man who saw what others did not, who dared to believe in what he saw, and who acted when everyone else hesitated. That night in London, while the world slept, he stayed awake, he waited, and he knew. This is a story about conviction, and about the moment when the entire world realized it had been wrong. And that's the end of tonight's story, the night George Soros broke the Bank of England. If you found this story engaging, don't forget to hit that subscribe button, give it a like, and drop a comment below. Your support means the world. It helps keep this series alive and growing. This is just the beginning. In the next episodes, we'll dive deeper into the life, philosophy, and the global impact of George Soros. Stay tuned, you won't want to miss what comes next.